New to investing? That's awesome. Welcome to a world that can be both exciting and a little overwhelming at first. But before you dive in, let's talk about the top 5 mistakes most beginners make, and more importantly, how you can sidestep them to set yourself up for long-term success. Mistake number 1, trying to time the market. A lot of people spend hours waiting for that perfect moment to buy or sell, convinced they can outsmart the market. But let's be real. Nobody can predict the market, not even the pros with decades of experience and fancy algorithms. Instead, I stick with dollar cost averaging, which is a simple but powerful strategy. That means I invest a set amount at regular intervals, no matter what the market is doing, rain or shine, up or down. Over time, this helps smooth out the highs and lows, so you're not stuck worrying about catching the exact bottom or top. Honestly, it takes the stress out of deciding when to jump in, and it keeps your emotions in check. Consistency beats perfection in investing, and dollar-cost averaging is your ticket to building wealth steadily. Mistake number 2, investing without a plan. Jumping into stocks without clear goals or a roadmap is like setting out on a cross-country road trip with no GPS, no destination, and no idea how much gas you'll need. That's like heading out on a road trip with no map. You might get somewhere, but it probably won't be where you wanted to go. Ask yourself, am I investing for 5 years, 30 years, or somewhere in between? Are you saving for a house, retirement, or just to grow your wealth? Your time frame really shapes your risk level and your strategy. The longer your horizon, the more risk you can usually afford to take. So, set those goals early and build your plan around them. Write them down, revisit them, and let them guide your decisions. A solid plan keeps you focused and helps you avoid knee-jerk reactions when the market gets bumpy. Mistake number 3, chasing the hype. It's easy to get caught up in hot stocks, viral TikToks, or whatever's trending on Reddit or YouTube, but here's the deal. That stuff is risky, and investing is not the same as gambling. Chasing trends can lead to big losses if you're not careful. I always do my own research, and I keep my eyes on the long term. Remember, real wealth is built over years, not overnight. The best investors are patient, disciplined, and not easily swayed by the latest fads or headlines. Mistake number 4, panic selling when the market dips. Markets go up and down. That's just part of the deal. Volatility is normal, and every investor faces it. Selling out of fear only locks in your losses. It's like jumping out of a roller coaster at the first drop. You miss the ride back up. Volatility is normal, so I remind myself to stay the course and not let emotions take over. The market has always recovered in the long run. If you stick to your plan and keep your cool, you'll likely come out ahead. Mistake number 5, ignoring diversification. Putting all your money into one stock? That's risky business. If that company stumbles, so does your entire portfolio. I use ETFs to spread my money across different sectors and regions, which helps protect against big losses. Diversification means you don't have to predict which stock will be the winner. Diversification is your safety net. It cushions you when one part of the market takes a hit, so you can sleep better at night. Avoiding these mistakes puts you miles ahead of most new investors. It's not about being perfect, it's about being prepared and making smart, steady choices. If you found this useful, like, subscribe, and share it with someone who's just starting out. The more we learn together, the better off we all are. And let me know in the comments, which mistake did you make or almost make? Let's help each other grow as investors.